Okay, so the journey has kick-started.
Can I put my hand down? My hand is spinning.
Yes, you can put it there. Alright. Okay, so we have been looking at the accounting ratio or financial ratios in our last class, where we were solving a question with respect to that. And notwithstanding that other stylistic question that I've been asking you guys to solve like that, I'm going to send the link from there. You will see how you will flow with that other question, because it's based on what we are going to solve. That I will know how I will also approach you guys with that. So other than that, we are going to look at now the general ratios before we move to the next thing that we have for today. So looking at the general ratios now, you can come now you can find yourself in a situation where you have given a lot of information, but now you have been asked to calculate the liquidity ratio only. So you have been asked to calculate the liquidity ratio, but you know that with the liquidity ratio, there are other sub-ratios under it. Now, if you have been asked now to calculate only the liquidity ratio, what will you do, or what will you say? So as we know that the liquidity is the ability of the enterprise to use its current asset to cover its short-term liabilities. So for you to calculate this ratio now, you are going to use assets which are lesser than a year divided by liabilities that they are lesser than a year. Take note, please. So the general liquidity ratio, you are going to use what? Assets which are less than a year divided by liabilities which are less than a year. So the next one is solvency ratio. And solvency is the ability of an entity to cover its debts at will using its assets, its total assets. So in this case, the formula that you will use for the solvency ratio will be what? Total asset all over total debt. Total asset on total debt. And then the next one is treasury ratio. I don't know if we mentioned this one in our previous classes. Please, are we together?
Yes, sir. We are one.
All right, that's great. So for the treasury ratio here now, for you to determine this one, you will use a formula which goes of credit which are lesser than a year, and then plus the cashable treasuries divided by liability which are lesser than a year. So that means the objective behind this guy is that you should use what? Your current assets and your cash, and then use these two, current assets and cash, in order to cover up your current liabilities. Are we together? Mighty. So the next one that we have there is what? Financial ratio, or the next one is
Sir, please, sir, please explain number 3 again. Treasury ratio.
treasury ratio. So treasury ratio is just the way through which we will use our current asset and the treasury asset in order to cover up the short-term liabilities. Are you getting me?
Current asset and current liability.
Yes, please. Current to use current asset, meaning the combination of the current asset, meaning both the asset itself and the treasury, and then we divide it by the current liabilities, or liabilities which are less than a year. Are we together? Then the next one is financial ratio. So with this financial ratio, we call the financial autonomous ratio. So it is the means through which the extent to which our equity or our total liabilities, our equity, to the extent to which our equity can cover our total liabilities. That is what we call the financial autonomous ratio. That means it is calculated as total equity on total debt altogether. So it's the means, or the ease with which our equity can cover our total debt. And the next one that we have immediate liquidity ratio. So when we are talking about the immediate liquidity ratio, so this one now is the extent to which the immediate cash or the cash that we have at hand or the cash that we have at bank can be used as well to settle the short-term debts. So that's what they are referring to here as the immediate liquidity ratio. Bon, I hope we are flowing.
Yes.
That's great. All right. So that is done now, and then that's all about the ratio analysis. So it's left now for us now to calculate, to solve other related questions or other questions that will fall under this guy to see how it goes. As I will still mention that other question, please make sure that question is an assignment. It's not an exercise again. Delay the exercise mentality from your head, and then let's flow with it as an assignment. Okay, so the next thing that I want that we should look at is cash flow statement or the cash flow statement. So who has ever heard about cash flow statement? Hello?
So we have
Yeah,
heard
yeah.
all
So
of
what
us
do you what do you understand by cash flow statement? Please say something.
continue your talk.
Never allow genius to rest. Yes,
For me, I know that I get him.
yes, very well, loud and clear.
Okay. To me, a cash flow statement is a statement which shows the inflows and outflows of cash in an organization.
That's mighty. A statement that shows
I
the
said it.
inflows and the outflows of cash within an entity or in an organization or wheresoever you belong. Auntie Maris, you are selling every
Yes,
day,
sir.
right?
Yes,
The in and the
yes.
outflow of cash.
Sir.
That is what we refer to as a cash statement. So that is all about the cash statement. So what are some of the importance of cash statement? If it is the way or the is to which you measure or you record the inflow and the outflow of cash within your organization, what would be the importance of all this? All together,
Yes, sir.
yes, this all about the slides like
Yeah.
this 1, 2, 3 points that we are talking of.
Shows the inflows and the organization. It means that it helps you to know to, the current cash situation in the organization. That's its importance. That's one of its importance.
That's great. That's mighty, man. That's mighty. So it will enable you now to know the financial health of the organization. Just from the way the cash is coming in and going out, you will know whether this entity is it making you profit or it is not making you profit. Because it is generally clear that what for any business or for any organization, their key main objective is to maximize profit and minimize costs. These are the main two objectives. No matter whether it is an NGO or it is not an NGO, they are still have all of them they have to make profit. Because you can, for example, you cannot be running an NGO and you are broke. How will you survive? Or what image will you be passing on to the people? So it helps you to evaluate the financial health of the organization, as well as the ratio analysis, like what we saw under the ratio analysis. And when at the end, or when you are evaluating your cash flow and it is showing positive, it proves that what you are doing good, and then you can know how you can better plan now in order to keep maximizing the profit and keep impacting people with whatsoever thing that you are doing. And then when it shows negative, it signals you that what there is something wrong somewhere. So you have to take into consideration what is happening. You have to do what? Auditing. We are all accountants, so you know what is meant by auditing. So you know how you can audit yourself or your organization by yourself to know what is actually happening. And if the cash flow is positive, it does not necessarily mean that you need to be happy. You need to also evaluate and see if actually the profit is coming from the means through which that profit has come to the business is something that is going to be sustainable. Because if the profit comes during this season and then you are not careful, the next season you are not going to generate profit at all. Altogether, you are not going to generate profit at all, and that will be that will not be making sense because the business might be bound to go down. Is everybody with me?
Yes, sir.
That's great.
Yes.
Yes, sir.
Right.
If in the
So our number 2 now, the understanding of the cash flow. Yeah, of the cash flow statement. So in order for us to understand cash flow statement now, we have to
Sir,
present the
it's only one important.
we have talked about how many? Anyway, don't mind a
One,
lot. Only one.
I heard only about it helps to evaluate the financial health of an organization.
Okay, you did not end the head about the profitability, about the negative balance or the positive balance.
Okay.
I mentioned something of that caliber. Anyway, don't mind.
Yeah.
The notes are intact, please. The notes are intact.
Okay.
But grab the lecture first. The notes are intact. All right, the next part is the understanding of the cash flow. So for you to understand the cash flow now, you need to understand what cash flow into the business through main 3 headings. There are the 3 main headings that we always have, which is the operating activity, the investment or the investing activities, and the financing activities. So these are the 3 main headings through which money flows or money enters or leaves the business. Either it's for operating activities, right? Or it is for investing activities or for financing activities. Right. So when we are talking about the operating activities, now it refers to the activities that the business or the organization they are carrying out, which can be what? Through their sales, right? When they sales, they generate revenue, have expenses as well. So when you are selling and then you are receiving, there are expenses that they are linked to that. So all these things, they will fall under the operating activities altogether, because as you are selling or whatsoever thing that you are doing, so all the elements that they will fall under the operating activities, they are not just going to be positive. Because let's take for instance, when you say you receive the money, that is a positive something. And now when you go purchase now on credit, or you are selling now to your customers on credit, you notice that what the cash that is going to available is going to be small, but it doesn't mean that you are not making sales. That's why we say that you can still be making sales as a business, but at the end you don't have money due to what credit says, and that always affects the business. But that's the way they operate. So as a businessman, we have to strategically look at ourselves or evaluate our customers to know and the economic situation, so that what the concept of the time value of money too should also be respected in such a way that it should not be affecting us as a business altogether.
Yes.
Yes, sir.
That's my
Yes.
Yes, sir.
right. So the next one that we have the investing activities. So these are the investment that the organization or the business is carrying out, is putting in their money into. So what they put in their money into, what will happen? The money is going to be yielding them income, or it's going to be yielding them dividends or the return on their investment. They are going to be receiving that. So when they are investing, their cash is going to leave, and when the reward is coming back to them, or the return is returning back to them, that is going to be a positive something. And then the next part of the financing activity or the financing activity, right? The financing activity. So this can be the case where the company is doing investment in other things like other stocks or others borrowings, stocks, investing in stocks in other companies, or in things like the secondary markets and so on and so forth. So all those things now we have to take them into consideration, and we have to make sure that we classify them, right? And then talking about the presentation of the cash flow statement. The cash flow statement, there are 2 methods of presenting the cash flow statement. There are 2 methods of presenting the cash flow statement. We have the direct method, and we also have the indirect method. Are we together, please?
Yes, sir.
Yes.
Yes, sir.
Yes.
That's mighty. So the two methods that we have in preparing a cash flow statement, we have the direct method and we also have the indirect method. So the both formats, I'm going to share them with you. But the only difference that comes in, the only difference that comes in is that there is only changes that we are going to encounter in case of the elements. And these changes, they are going to come only at the level of the operating activities. Meaning, with the direct methods, the elements that you are going to have there, they are going to be different from those elements that you are going to have under the indirect method. Now, the question can now come like, if now you see a question, or you are faced with a situation, which of the methods are you going to use? That should be the challenge, right? Which of the method will you use? Whether you are using the direct method or you are using the indirect method. So when you see a question based on the elements that you have in the note share, you don't even have to be considering that, okay, are you going to use the direct method or you are going to use the indirect method? Once you have a scenario, once you have anything in front of you, just start analyzing it. Because you know that these are the elements that belongs to the operating activities. These are the type of elements or the category of elements that belong to operating activities. You know that what? You will just be putting them. You should not be bothering whether the thing is direct or the indirect method. The highest thing is for us to master the both methods. The both elements, the elements. Because when you know the elements, the highest thing is for you to know the elements. When you know the elements, then you will start presenting the thing. And that is how it goes. So let me see the thing here, even. Is it okay, please?
Yes, sir.
Yes, sir.
Mighty.
Yes, sir.
So while I'm checking that, if anybody is having a question, please let the person ask.
Prof. Sherif asked a
Yes. If anybody is having a question, let the person ask. All right, please, can you see this? My people,
Yes, sir. We can see it.
that's my thing. All right.
yes, yes, yes.
So take a look. This is a sample. And then look at the indirect method. So the only changes that we have is at the level of the operating activities. So this is the direct method and this is the indirect method. So that's why you are going to have this. So it has been specified there. The only difference is going to come here at the level of the operating activities. So with the indirect method, you are still going to represent both from here down and then till here. And then what you are going to change, you are only going to substitute this with what we have here. And then we will be good to go with our cash flow statement analysis. And that is all about that. And we can say we are done with the guys. Now I'm listening to you guys now. Please unmute yourselves and talk.
So I've not heard your question. Have you asked any question?
Really, I'm not asking a question. I'm just asking if there is.
What network you think are done?
Yeah, I think network is not. MTN is dancing. more than ever.
So does that mean that you are going to send us the notes, the soft copy notes?
Yes.
I'm asking if you are going to send us the soft copy notes.
Yeah, I will send the notes. I will just forward it to one of you now. I sent the link to, is it Malis? Okay, I've sent the link to that question, and then also the question, and also the notes are where the. Okay, please. So what we'll conclude is that take time and then and go over the notes. I will send the notes, then take time and then go over the notes, and then you see how we can go. This is something that if we were to copy this thing in class, the thing is going to take the entire day. And if we are not careful, we might not
Sir,
have time. Yes, Mama.
that assignment like that is CCA.
My assignment will never be
You
seen in
must not
Jesus.
know now.
My assignment will never be seen in Jesus' name.
God forbid.
Okay, please. Why coming next week, please? Remind me to collect all those marks. Are we together?
So you have not marked even one of my own, and I've
Yes,
showed
we
you
are
all.
all there.
Very, very important.
No, I showed him outside.
But
I
the
was
one
not outside, I was dripping for fees.
I'm sure